Kevin, it's good to see you again. Thanks for being
here.
here.
See you, Scott. Thank you for the platform.
So, this is the second quarter in a row that we've sat together following a big slide in your stock, and investors seem to be questioning where your growth is going.
Yeah.
What's happening?
Well, first of all, I think we need to control the narrative a bit. Is that when people refer to the last earnings call, after Q3, we were plus 22 in the top line, we were plus 29 in the bottom line. So the narrative we talked about is where we saw operating income because the need for additional investment in the company. And I think when we got into the fourth quarter, we had a great back to school. We loved the way that the year was looking. And the last time we talked, we felt really good about the business that we had and where we were going. What we've learned, though, and I think what we've seen is that this business is much more. We are a growth company. You'll never hear us not saying that. Our current outlook still has double-digit plus growth, which is close to industry and sector leading amongst the leaders there. But our business is so young. Our business is really just getting started. When you look and you think of the opportunity we have is that we do need to make certain investments. And this isn't, investors be damned. I am the largest shareholder. Like, I share the brunt of what's happening here, too. And, we've got a long-term strategy. We remain committed to it. And I think when you look at the numbers and you look underneath the hood, we've got a great business and a great brand. And, we want to keep driving towards that.
You've called yourselves a, quote, growth juggernaut. You had 26 straight quarters of at least 20% revenue growth until the streak was just broken. Can you get back to that level, or is that in the past now?
Well, I think you've got to look at the record of success that our company has put up. And when you think about 26 consecutive quarters for a consumer retail company, I'm not sure if it's a streak that'll ever be broken again. And if it is, hopefully it will be us. And that's how we think about it every day. But this is about, what we looked at with the retail environment. We looked at with what's happening in North America with a business that's primarily in North America, 85% of our business, but it'll be more than 20% of our business will be outside North America next year, as we continue to grow and find these other arteries of growth. But North American retail is in a very difficult place. I think we've looked at some things that we could probably do better as well. And so these are not things, there are things outside of our control, but there's a lot of things inside of our control. And so we are a top-line growth company. We are a bottom-line growth company. We understand both of these metrics. And I think investors have learned that over 11-year record of success, the last 6.5 enjoying 20+% top-line growth in this company, too. So more to come.
You're the CEO, but you're also the founder. I mean, this is your baby, so to speak. When you watch the stock do what it has for the last 2 earnings periods, the stock's half of what it was a year ago.
Yeah.
How do you deal with that? How does that make you feel?
Well, I mean, business is passionate. Business can never be emotional. And so I think when we look and understand what the long-term vision of the company is, we've had a great run as a company. I mean, again, 11 years public, we've seen it all. And we lived through 08 and 09. We've seen highs and we've seen lows. And one thing we know is that I would not bet against Under Armour. And if there's a message today for shareholders is that, look at the body of work that we've done and we've put in. Look at what we've done with whether it's 26 quarters or whether it's, if you had to tell me 21 years ago we'd start, we'd wake up in 2017 and we'd have a company, approaching $5.5 billion-ish in revenue. If we'd have, the suite of some of the best and most premium sports marketing assets in the world, we'd still be making $300+ million a year. I'd probably tell you that's a pretty good story. So I think the narrative, and the reason I wanted to wait a week and just let everybody settle down was to talk about this company plays offense. This company throws punches. That is what we do, and it's how we continue expecting to be able to run again. And so, we feel good, but, there are tweaks, and this is not to say, the world is rosy. This is to say, like any company, and a great stat. Our business doubled in the last 3 years. So we were $2.3 billion in 2013. We finished the year at, just under 5 or 4.8+ billion. Companies that double like that, there's a lot of things that happen. And this is an excuse, but this is certainly just making people aware of, this doesn't mean that the players have changed. It doesn't mean that the team is different. The outlook or the ambition or the upside is any different. It means that we are running forward and we are building a fast-growing company, and we're building one that's here to stay for a very long time.
You just said tweaks. What needs to be tweaked? Are you spending too much? What particularly has to be tweaked?
Yeah, when you look at the calibration moment that we're in as a business, and so there's things that you have to worry about and you don't have to worry about. So growth does hide a lot of inefficiency. And I think there's some opportunities for us to be better. And this isn't, again, we have a great business. When you look down at the pieces and you look at the momentum of growth, you look at this year we had our women's business cross $1 billion, our footwear business cross $1 billion. So those engines are in place. But we do look at our business and say there's always opportunities for companies to get better. And we think about ways that we can do that. And it's when we look at the new heads and we look at what we need and how do we streamline the business and the operations that we have. I think there's opportunities in every company. And so this doesn't mean this is more than just let's turn out the lights before you leave the office. But there are things like that too. People didn't have to think about that as much because of what growth does and what growth means to our company.
You know how this is though. When your growth by any measure is better than impressive, obviously. But when your stock is trading at a particular valuation, some people want it to be at a specific level of where it has always been. And the moment it slips, people start to question where you are in your overall strategy of becoming, as you've said repeatedly, the #1 company in the world.
Yeah, Scott, let's slow down. I think one thing is really important. This company grew $870 million in revenue last year. We're telling you we're going to grow another $600 million in revenue this year. We're telling you we are going to make more than $300 million. This is not a company that's on the ropes. And so, like anyone, I think operational efficiency is something that's critical for any business. And recalibrating at those moments and those opportunities to do it, yes, we look at things like, when you see the growth and you see the amount of people that have dove into athletic wear, for instance. This isn't something that's restricted to just being sold with sporting goods. Athleisure and athletic wear has been really placed everywhere in a broader market appeal. And we look and where we see that we could be better and other things that we could have done, we look at some of the product that we've had on the floor. And we've relied on things like, $55 hoodies to sell. And we think like how innovative, how much build needs to be in there because the same hoodies that sold a year ago are not the same hoodies that will sell this year. And that's where the grounding and going from performance to more lifestyle and finding, more opportunities to find wearing occasions beyond just the athletic fields. Like those are opportunities for us. And you look at some of the bets that we've made, and I think we could probably debate, the time of how we've made those bets, but whether it was moving from performance into lifestyle. We launched this year our Under Armour sportswear collection, which is going to help us fill out that gap. That lifestyle, for instance, is an opportunity. Kids want to wear our brand. Like, let's remind ourselves, like, this is a brand, like, ask the people out there, your kids' closets, they have Under Armour. They love Under Armour. Like, there's no brand issue here. But we also see the opportunity that when we look and say our competition has a third to 40% of their business, our two major competitors, in lifestyle. For Under Armour, it's less than 5%. And this isn't we don't know how to do it. We don't know how to make lifestyle product. We absolutely do. Give us the platform. Give us the time to do it. And what I didn't want to do is I didn't want Under Armour to become I never want us to be just a one-trick pony. Like, we're not just about growth. And so managing and tempering that growth has a lot of things that go into it. And it's everything from the retail environment that's out there, which there are good retailers. People survive. This is an indictment on retail. This is us taking accountability for our own actions first and foremost. But there are things that, when we look at the growth, whether we've got a new system with SAP, a great partner of ours, that's going to help us connect our 200 million people that we now have on our Connected Fitness platform into our database of telling and giving us information about sleep and exercise and the things that they're doing and how that'll form us in our decision to help us sell more shirts and shoes. So we've got a lot of bets, a lot of long-term bets that have been in play. Wish they'd happen faster, but whether it was a shift from performance to lifestyle, the shift from North America to rest of world, the shift from one of our retailers, which was the Sports Authority last year. And, we made the decision to move into Kohl's, but we didn't do that until 2017. And so do we anticipate they'd go out of business? No, that's not something that we thought about. And so welcome to business. And the only thing that we can tell people is, like, you look in my eyes and you ask and tell me, do you believe, is this the team that has done this for 21 years, 11 years public and knows how to win? I think a lot of people, they bet against Tom Brady the other night, too.
Yeah, they learned the hard way what that's about. But you did. Yeah. To continue your analogy, you did lose a key teammate. I mean, your CFO is leaving, and that seemed to unsettle many folks on the street after, he's only there for barely a year.
Yeah, our CFO left for personal reasons. He's still there. He's a good man. He's a Naval Academy grad, and so we wish him the best. We've got a really good person, Dave Bergman's a 12-year Under Armour vet who'll be there. But, we're really proud, I think, of some of the others that we've had. And Colin Brown, our head of sourcing, came from VF recently. Andy Duncan, our new CMO, came from Amazon as well. Like, we've got, an anchor. Our new head of IR just joined. Like, there's a team. And the hard thing about business is when listen to people press release. We got 15,000 teammates, right? We've got an executive team that is, robust and full, and the same people that got us here. But one of the lessons that we've learned and that we know, and you ask about what does this mean? Is it the end? No, this is not the end. This is a company that we understood that the same things that got us to $1 billion were not the same things that were going to get us to $5 billion. And as we sit here and we take those moments and we have it without just the unabated growth that we've been able to love and feel, is because we don't want to press our product into a market that has now become so price focused. We don't want to be the $30 option in the store. We want to be the $75 premium that's driving people through innovation. And I think what we found is that this is an opportunity for us to, unfortunately, I don't think you're getting the press release of all those that stay, and that is the world of HR welcomes to. There's When you bat, you typically, there's not everyone is going to be there for a number of different reasons.
But I mean, just the position in and of itself, having to go through another CFO, structurally, does that delay the way you would allocate capital, the way you would think about those types of decisions having to be potentially put off because you have a new person in the seat?
No, I don't think so at all. I mean, our growth strategy is intact. The investment thesis for Under Armour is intact. Like, what we've done is we changed the top line and said, you know what, we don't think it's the best thing for us just to declare we're just going to grow, is because there's a lot of things that have come up, and a lot of it is, outside of our control. In the last 2 years, the last 16 months, we've had over $5 billion of top-line revenue disappear from our industry. And so is that going to have an effect on Under Armour? Yeah, unfortunately, we're 85% in North America. Again, it'll be, a little less than 80% next year. And you look at that growth and like, yeah, we're on rest of world because international grew 63% for us this year. China, where we've taken Stephen Curry, the two-time reigning MVP, on 2 consecutive tours, and we're seeing great success, and people are demanding the brand. Like, and this is not it's every place but North America. Like, North America is in good place too. Again, the growth we're talking about is still, double digits, and something that we're excited. And so we want to get people and make sure they know that we are a growth company. We remain one. But we're also prudent in our investment thesis in the way that we're going to make thoughtful investments that will ensure we become a $10 billion brand. Like getting to where we did and through 20 years in history, very proud of it. But the mission that we have has not changed. Like, our vision is to be that $10 billion brand. And unfortunately, we've got a $10 billion business, a $5 billion business today, but we're investing in the infrastructure for us to be a $10 billion company. And we're not doing that like, without any thought either. Like, we're doing it very thoughtfully. Like, if there's things that we need to do, we are prepared to make the difficult decisions, and that's how a company lives 20 years in business, and especially the way that Under Armour has and seen the success that we've had.
Do you feel like you need to win back, so to speak, Wall Street support? I mean, you've had, I don't know, at least 10 downgrades of the stock since earnings. People seem to be running for the hills. Obviously, investors have been selling the stock, but you've had analysts, well-respected ones, take the price target down by fairly dramatic levels. Do you feel like you need to win support back on Wall Street?
Scott, I think that our record of success is something where if you're going to find somebody, and if you want to start a business, and you want to give us money and say, you know what, I believe in Under Armour. I'm going to bet on the jockeys. And there's a number of jockeys. This isn't a one-man or one-woman company. There is a team of people. And I'll tell you right now, our team of people, they're pissed off. Yeah, they feel it. Like, and this is one of those things where when you win and you win and you win, I mean, again, the 26 quarters, and when people are piling up our difficult quarters, it's not a fact. So we had a tough time in the fourth quarter. I think we're incredibly transparent about it. We gave a great logic as to why that happened. We gave a great logic of the deep root cause that we're now taking action for and addressing. We'll address that in 2017. Wall Street can count on us. They've always been able to count on us. And, I think our track record and our history is worth something. So have we built up an enormous amount of credibility? Yes. As I've always said, trust is built in drops and it's lost in buckets. Right? Did we have to spend some of that credibility and that equity? I believe we probably did. But, no one's changed. No one has now picked up a new hobby. There's nothing else happening in the company. This is the same growth company I think that people once knew. And, we're proud to, go get it. And my team at Under Armour couldn't be more excited and more angry and ready to go.
You have obviously a lot of good folks there. You're the top jockey, as you say, sort of the terminology that you used. One of my panelists suggested that maybe that you should pull a Jamie Dimon. Use the opportunity to buy back your stock when it got hammered so much as a sign of credibility in the market, support, belief, etc. I'm wondering if you did do that, and if not, if you thought about it, or you will.
These inflection moments in time, like these are these points, these opportunities. Like, this is an opportunity for us to change the way that we run our business, to not just be growth driven, but to truly build a company that is a company that's as great as our brand. And again, we have a good company. We have people working hard. We just need to tighten the belt a little bit. And so, give us the opportunity to do that, and give us the opportunity to impress you. We're not looking at buying back stock.
But I mean you personally.
Yeah, I mean, there's a lot of things.
You know what the point I'm making is sort of Jamie Dimon, right, steps in by, and all of a sudden the financials and J.P. Morgan stock get this new sort of lease on life as a result of what that means in the marketplace, optically, if nothing else.
Yeah, I think probably more importantly has been my commitment to our company, is that I've remained the largest shareholder. I've had lots of opportunities to sell my stock, and I haven't. It's not because I just like being at Under Armour. It's because I believe that the opportunity is so much greater than what anybody has seen yet. I believe we have the opportunity to be the #1 brand in the world, and I think our competition knows it, and I think they're really good at what they do, and they should feel good, and people will have fun. It's, continue to kick us a little bit. That's all right, because we've demonstrated like we are in the ability to be, we can demonstrate our own toughness, and we can take it, but we want to run this company, and if investors need any message, we're not going anywhere. My 2 feet are planted in this company. My management team's 2 feet are planted in this company as well. As I tell you, everybody's got a little bit of a chip on their shoulder right now, and we look forward to making that right.
I want to talk to you more broadly about just the retail business that you clearly, at least somewhat, have to be caught up in. You said on the earnings day that, quote, numerous challenges and disruptions in North America retail tempered our results. What are the specific challenges that you, along with these other retailers, seem to be, not only dealing with, but having a hard time overcoming? There are some really struggling retailers out there, and we're reminded of it almost every single day.
So I paused to be the mouthpiece for the whole industry, but I'll tell you what happened with Under Armour. So number one is that, the closures had an impact on something that we thought would come back a little more dollar for dollar. That wasn't the case. It doesn't mean that the revenue's not there. It means we just have to be more creative and a little more inventive of how we go get that money. Number two, it's one thing that we look at ourselves and say, Under Armour's always just sold, and we've created this commodity of business, and whether it's a cold gear mock, a basic base layer for cold weather, or whether it's some of the hoodies and other things, that have just become these key items. And I think in time is that, I believe in the fourth quarter that we weren't as aggressive as we should have been. And I think we got into, the consumer's going to show up and they're just going to buy our product. And it wasn't just because of a lack of innovation. Like, there's good product in the line. We just allowed some of the more basic product to make it to the floor because it was easier, and because the consumer always bought that. The commoditization of some of those basics and the expanse of where it's going into other retail distribution channels, it's minimized the need for the consumer to get it from Under Armour there. That, combined with a promotional environment that had our 2 key competitors, at one of our largest and best accounts, is, they were 40% and 50% off respectively. And so we find ourselves in a position saying, do we chase price down? And this is where we were in the fourth quarter, and saying, do we chase price to become a discount brand? Because what we found, and then we said we might have been late to the party, and then we started to saying, we've got to move these goods because we have a business to run. And as we began to do that, we found that when we got within 15-20% of other pricing, our product moves. And so this is not a brand issue. Like, our product moves, but it moved at a number because the consumer has been so trained for that. One thing on the stat I love about, the fourth quarter was that, the fourth quarter our DTC business was almost 40% of our business. And so you look again at these moves from wholesale to direct to consumer. So we have great, some great wholesale customers. We're going to continue to do big business with them, but we need to be able to control our own destiny, a little more than we did and we found. And again, that means having a relationship with them we want to be the premium player in their stores. You're not going to walk in their store and find Under Armour at 40 off. And I think that what we've seen in retail has been it's been a very dismal experience for a lot of people. And it's not the brand that we want to be, and it's not the opportunity that we have.
This is sort of the broader point that I'm trying to raise, is that you're forced to do things because in some respects consumers have been, even if you're selling premium brands, consumers are so used to paying less for almost everything since the crisis. Is that going to change? We've demonstrated a track record of being able to sell product at full price. It's one of the things that, when we broke into sporting goods, we started in the equipment section, and all of a sudden, because that's what Under Armour was in 2002, and then we moved from the equipment to the apparel section. It was like, look at the margins and the maintained margins they're able to keep. And so we've now created a category. We created our own pie, a new pie. We expanded the existing one, and we created this new pie of performance. And I think the consumers reacted because performance is in a lot of places. And I don't know if that definition has really been thoroughly told. And again, I look at fourth quarter, I think we could have done a better job telling it. What I will tell you is that as we look out to 2017, is that you will see great storytelling. You will see the themes that are running through my company right now: edit, simplify, make UA simple. That's what's written on the whiteboards in my office. You've heard about, don't forget to sell shirts and shoes, but make UA simple is the model that's there right now. And edit, we can do a better job. When we say being more efficient, running a better company, it's more like things of where we're thinking about launching 15 or 20 colors. I bet there's only 6 or 8 that are really great of that shoe. And it's making the hard decision on the front end that allows you. But the proliferation is one of the easiest things, the first things that happens as business grows. Like, I've seen this. I saw it when we crossed $1 billion, and we had to tighten the belt. Now we're at another point, we're just a bigger company.
company. We're a little bit of a bigger ship that doesn't turn quite as fast. And so we're going to have to make some decisions and make them really quickly. And, we know the right ones to do. Like, we know what happened and we know how to fix it.
It's clear to me from listening to you, though, that if you want to call it the pain of having to go through this over the last couple of quarters and watch what your stock's done and then come talk about it, has at least at some level forced you to think about different ways of adapting to the way you run your business in the future. You've talked about that in this interview today. I don't know if you want to call it humbled or whatever, but it can't be obviously great to watch your stock do what it did. You're an overwhelmingly positive person, but it no doubt has changed at least somewhat the way that you think about your company and the way you want to manage it into the future, no?
Look, I had someone ask me that question and say, so tell me, has it humbled you? And my first reaction was, I'd like to think I never needed to be humbled, but we all probably get over our skis from time to time, and it's always good to have your wings clipped a little bit. When I think about what happened, and immediately my reaction goes to, I feel wiser. I don't believe there's surprises in life. I think that, it is what we do, is that there is always signs for things, and the lessons learned from where we ended Q4 in 2016 to the things that we could have done they're not easy, they're not there, and they are definitely, it is chess, not checkers. And so we need to be thoughtful about the way that we approach 2017 in that exact same way. But we will apply these lessons as a management team that has, again, been in the arena. We've been on the battlefield. This is, we are battle tested. And so are we pleased with the stock performance? And again, for our shareholders, those are things we cannot control. What we can control is our business. What we can control is our consumer. What we can control is the relationship, the storytelling, and the amazing innovation that we put into our product. And so you'll continue to see that from Under Armour. I hate thinking about us, as just a stock, and I know there's a lot of people that do, and we get it. And a lot of people have made a lot of money riding, the growth of Under Armour, for a long time. And, we know how to do this, I guess would be my message to you, is that give us an opportunity, give us a chance to come out and prove to you. There's nothing drastically changed at this company. We feel good. The fundamentals are in place. The team's never been more energized, and we're going to go run and build a great big business.
Let me switch gears.
Great big business.
Let me switch gears and talk a little bit about President Trump, because you were in the room with the president a couple weeks back with a number of other CEOs. First off, your impression of the man himself in that context.
Yeah, I think he's highly passionate. He definitely, to have such a pro-business president is something that's a real asset for this country. I think people should really grab that opportunity. He loves to build. I don't think there's any surprises here, when you look at the president. So he wants to build things, and he wants to make bold decisions, and he wants to be decisive. And I'm a big fan of people that operate in the world of publish and iterate, versus, think. So there's a lot that I respect there. But, I think there's a lot of voices out there, and a lot of people that, a lot of constituencies in the United States of America. There's a lot of things that are issues that are coming up that are very serious, they're very deep. They're not quite as simple as going to be solved in just a day or two or one piece of legislation. So I'm encouraged by that debate. I'm glad America's engaging in it.
Steve Sadove, who used to run Saks, was on CNBC this morning, called prospects of a border tax an existential threat. Those were his words to retail. Yeah. You feel the same way?
60 million jobs, humans that work in retail in this country today. So there would be an absolute effect from the border tax. And so, one thing when we think about, some of the things being proposed, the border tax would have a absolutely very, very difficult effect on all companies in the consumer space, particularly retailers, brands like ourselves. Again, I'm cautious here to not try to be the mouthpiece of our industry. I'm the mouthpiece for Under Armour.
But it would have an impact on Under Armour.
Of course, it's the number one issue. When you ask me about the new administration, it's the number one thing that we want to make sure that we do have a voice and we can explain. Because the one thing that I believe the president doesn't want to do is he want to hurt businesses. And the one thing we talk about taxes because of manufacturing, there's certain industries that just don't have. There's no such thing as an apparel industry that exists in America today. Today it's less than 5% of apparel purchased in the United States was manufactured in the United States, was built in the United States. And when you look at, sort of what's happened with that narrative, we've taken actions in Baltimore. We've already started our own domestic manufacturing. We're pushing towards a lot of these things. But, I was in Bel Air, Ohio in 1998 when I watched 187 sewing operators, lose their jobs because the factory was pulling out to Mexico. We gave up on this a long time ago. And so I think the intent of what the president wants to accomplish is very important. But I think there's got to be the pragmatic approach of how do we work with companies to actually get this across the line.
You are certainly trying to do your part with the billions that you're investing on the Baltimore waterfront, where you will actually be manufacturing more stuff in the United States than you ever have in the past, once that's all complete.
Yeah, this is over a long period if it gets to billions. This isn't a commitment. Again, our CapEx is something we've dialed in, like when you talk about the changes that we've made since what we found in running a better business in 2017. But yeah, it's very important to us. I believe fundamentally that the definition, that the expectation a consumer is going to have of any brand, particularly a consumer-facing brand, is going to drastically change over time. People will be they're going to have higher expectations, and of course it'll be the double bottom line. It'll be shareholder return, all the things that matter, but it's also going to be what can we do to make people want a reason to buy a product. And it can't just be I like the athlete and what a superstar. It's got to be that we're doing things. Now, at the heart and soul of that is jobs. And so we feel like we've got a few innovative products called City Garage right in Baltimore City that we built. We've got a workforce development training center there. All these things targeting and pushing toward, how do we bring product back and manufacturing back here? And this isn't just an American, U.S. domestic story or any story contingent to just one administration, because the people of Sao Paulo want product that's built in Brazil. The people of Europe, the same thing. And globally, it's the same message. And so where we can do a better job, we expect to do that.
Your guy Brady won the Super Bowl, so that's got to make you feel pretty good.
Winners win. And again, we had another great guy, and hats off to Arthur Blank and the Falcons whole organization too. I think they got the two best teams. I think got to the playoff, and we saw a great football game. And Julio Jones, another one of our guys, is a great asset. But yeah, Tom Brady's a special human being, and he demonstrates things for all of us. And so we're proud of our partnership with him. We've got a brand new sleep line, a product that we just launched with Tom too. So again, bringing innovation, taking 8 hours of everyone's day, the third of their lives they never talk about.
Right,
so we'll keep reinventing.
You can wear Tom's PJs too, as long as you buy Under Armour stock. Kevin Plank, thanks so much.
Thank you very much.